Okay, so let's start the solution. Okay, but before that, we will draw our basic accounting equation so that we can understand it clearly that what the problem is saying and how do we get our solution. So, as a matter of this is a as a matter of solution, this is a basic accounting equation we have in front of us. So, to make this more clear, I will just give you example. Okay, let's say suppose you have a business of selling video games, okay, to customers, and you have generated a revenue, or you have sold video games for $20,000, but still your customers are really trustworthy, and for that you have given them time so that you will be paid off. So you have given time of, let's say, 30 days. So after 30 days they will pay you off for the games that you sold to them. So you are likely to receive $20,000 from your customers. So this will be your assets. Plus you have some extra cash in your cash drawer for purchasing new video games or making payment to your employees. Okay, so you have excess cash of, let's say, $10,000. So in total you have assets of $30,000. Okay, that clear? Let's suppose you have purchased some video games out of the country, like you have imported some very advanced video games that was not available in your country but outside of the but it was those were available out of the country. So you have imported them, but still you have imported them but you have not paid those suppliers. So that will become your liability. The amount which you are likely to receive will be your asset. The amount which you are likely to pay, for which you have availed the benefit, will be considered as liabilities. Okay, so let's say suppose they are like $20,000. $20,000 you have to pay to suppliers, okay, for which you have imported the video games. Okay, now what's the equity part? So as of now we have we have 30,000 minus $20,000. Now, in very simple terms, it is the take away from business. You can also write it down. Take away from business after paying all liabilities. Okay. Let's say suppose you have 30,000 in your hand after 1 month. Okay. After receiving the amount from the customer and after summing up the cash balance, so you have 30,000. You have 30,000 at that time, and after that you have deducted or you have paid the $20,000 for the liabilities you have incurred. Okay, so what amount will you have at the end of the day after paying off the liabilities from your assets? 10,000 amount. This is the amount you have generated out of your business, okay, after paying off the liabilities. Now you this 10,000 is totally yours. Okay, this is what you have gained from your business. Now this is actually also known as the net worth. Although net worth can be derived in many ways in accounting terms as well as in finance terms. However, for as of now, net worth is asset minus liabilities. Simple as that. Okay. But for the current problem, what we have, what we have. So for that also, we will draw our basic accounting question to get the solution very clearly. Okay. Okay. So it has been said that as an account payable has been paid. So what will be the effect of that transaction on the both sides of the equation? Both sides of the equation means this is the total equation. Both sides means this side plus this side. Okay. What is the asset? You know it very well. What typically items are considered in assets? We know it. Okay. Now we will interpret the problem to get the solution. Okay. So now when the account payable, so account payable will be considered as liabilities. Now what is account payable? Let's understand this. Suppose, so I have already told you that you are in the business of selling video games. So if you have imported some advanced video games outside of your country, okay, but you have not paid for such video games after you have imported them, okay, so that will become your liability. You will have to pay them off to create your net worth more, okay, more realizable. So if such liabilities which have just increased after you have imported the video games and not you have not paid them, so those liabilities will increase. But after you will pay off the liabilities, they will be decrease in liabilities. Am I clear? Why? Because you are paying off the liabilities. Is that clear totally? Okay. Now what will also happen, it will also happen that there will be a corresponding decrease in the asset side. Why that so? First of all, let's write it down that how will it, what type of asset, what type of asset will get decreased after making the payment of liabilities. Then I will make you understand that how will it go, how will we go about it. I have told you that you have 10,000 of dollars in your hand before transacting anything. Okay, before proceeding with anything, you have $10,000 as cash in your hand. Okay. Now if you are paying liabilities, then of course this 20,000 you will receive later after 30 days. Okay, but this 10,000 is at your hand for disposal, so you will use it. If you will use it, this will be decreased. That is why if you will pay your liabilities will get decreased. Your asset side will also get decreased. Okay. Leave leave the impact on the equity right now because it is not relevant in our question. Okay. So sorry for the interruption. So they will be, the option is B. Both side decrease. Okay, that's all for the solution. Both side decrease means this side also and this side also. Okay. we can also understand it in a different way. Okay, let's go with that. Okay, let's go with that. Let's say suppose we have $1,000 of initial assets, $500 of initial liabilities, and as net we have $500 of equity. Am I correct? Okay. Now let's say the account payable, which in the current question is around $200. Okay. Now what is the resulting assets? $800. Now liabilities will also get decreased because this will be considered. Now 300. Okay. So the effect is 500. So we can say both sides decreased by 200 amount. Okay. So that's all for the current solution. Thank you.